Good morning, everyone. Welcome to the TradeStation Masterclass. I was just setting up my screen, so just give me a moment. We are going to talk a little bit about strategy backtesting and optimization and some of the more advanced features that are available for you to optimize a strategy. Before we get started, here's the title of today's presentation. It's called Walk Forward Analysis and Cluster Analysis using the Walk Forward Optimizer. I was trying to look for different strategies that would provide us a good example to use inside of the Walk Forward Optimizer, and found an example that we're going to take a look at together today and see if we can make some sense out of it. Let's go through some of the disclosure before we get started. Every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance is no guarantee of future results. We are going to take a look at a strategy performance reports, and whatever happens in history is very fitted to that market movement, market behavior, and it's very unlikely for things to happen exactly the same going forward. But today's topic is all about performance and have a little bit more confidence in strategies based on that performance report. But I just want to make sure that everyone is aware that those reports are not a guarantee of future results. If anybody needs additional information, just go to tradestation.com/important-information, and you'll find all the disclosure information there. Okay. I don't have anything else here in this PowerPoint because I said, let's just jump on the TradeStation platform and highlight some of the features around optimization and backtesting. So let me go ahead and go over to my TradeStation desktop. Let's see. This is the strategy that I found. By the way, the name of the strategy is just WFO test. WFO is the acronym for the Walk Forward Optimizer. So the strategy itself was designed specifically to use inside of the strategy, inside of the Walk Forward Optimizer, and get some interesting results. It doesn't mean that it's a good strategy or a strategy that we support. It's just an example. But just to give you an idea, let's go in the insides of the strategy to see what the strategy is doing. There's a lot of signals that are generated when you put it on your chart, but once you open up the easy language code, even though the code may seem a little bit complex, it's not as complex as it looks. A couple things that this strategy is doing, it's basing all its entries in a concept called the Keltner channel. I'm not sure how many people here are familiar with the Keltner channel, but the Keltner channel is a study that uses average true range as part of the calculation. So not only to enter the market, but also to exit. Although the Keltner channel is just an entry strategy, this one in particular that we're looking at also has some exits in them. Now, as you can see here, we have a set of inputs. It seems like there's a lot of inputs going on, but once you look closely, they look like a lot because we created inputs for the short side and the long side. Let me explain. Like over here, when you see the L length, this is the length for the long entries. Notice that there's also an S length, which is the short length, which is also set to 20. A lot of these inputs are repeated. We just give you a separate input for the long and a separate input for the short in case you have a bias in the market and you want to provide different values to either direction. Let's say that you want to give a different value to your long entries or a different value to your short entries. That's the reason why they're separated like this. But if you look at the values inside parentheses, they are going to match by default. So we have 20 for the Keltner calculation. The Keltner is the simple moving average, and then we calculate numbers of ATRs above and number of ATRs below. So this is the Keltner long, and this is the KS, which is Keltner short. Number of ATRs are the same, 1.5. Then we have an ATR length to calculate the ATR calculation. There's an ATR calculation. It has to go and look at historical data. The ATR is based on 10 bars back. And notice that also is separated between a long and a short. They're both set to 10, but then again, you have the ability to specify a different look back period for the ATR calculation. And then we have the number of ATRs for the exits. Once you are in a position, we're going to use ATRs as a way to exit your longs and shorts based on how volatile the market activity is. Ours is just a straight calculation that tells you how big the bars are from high to low and gives you a sense of volatility or the magnitude in which the prices are moving. In addition to that, we have some trailing stops. Notice that there's a trail percent and there's a floor amount. The floor amount, it's a kind of an activation. It just lets the strategy know that in order for the trailing stop to be activated, it has to hit a floor amount. The floor amount here is $1 per share because the default is based on a per share basis. We can change that if we want to. But here it says, as soon as you are in, as soon as you're in the profit or the profitable side by 1 point, then a 20% trailing stop is going to kick in. Yeah, the 20 right here is the trailing stop. And you can see the separation again between long and short. And then you have the position basis, which is telling the strategy, how is it that you're calculating those values? Remember when we looked at the one, we said, if there's a profitable position by 1 point, then it activates the trailing stop. Now this is $1 per share. If you change the position basis to true, then you want to calculate that value on a position basis, meaning that we will look at the number of shares you have and the total amount of profit or loss that would generate. Okay, that's how position basis works in our side. By the way, if you have any questions, the chat is right there. So feel free to open up the chat and send me any questions you guys have. Let me just send a message here so you know exactly where it is. All right, but this is the basis of this strategy, using Keltner channel for the entries and the exits. Everything else is just a calculated strategy that generates those entries and exits. Let's go ahead and take a look at how the strategy performs on the chart. Let me switch over here to my TradeStation. I have a chart of spiders, SPY. The chart, let me go ahead and go into the settings of the symbol. Let me go here, settings. And you can see that on this particular example, I'm going back 10 years of S&P data on a daily time frame. So this is 10 years of daily bar chart. And I have the default strategy with the default setting, default parameters. Let me go back here in history. Okay, we can see that at the very beginning of the chart, no signals are generated. The reason for that is because there's a setting in TradeStation called the max bars back setting that reserves the very first 50 bars of the chart for calculations. So many times when you add a strategy to a chart, you're not going to see signals from the very beginning. The very first chunk of data at the very beginning of the chart is going to be reserved for calculations, and then the strategy will kick on right after that 50th bar, and then you'll see orders going through from that moment on. But you can see how the strategy is generating the trades, the signals. You can see that KLT, that's for Keltner long, the long entry, and then we have the ATRs, exits, and the trailing stops as well. Let me go ahead and add the study that goes along with this. I'm going to go to add study and pull up the Keltner channel. Okay, the Keltner channel in the strategy is using 20. You can see how the Keltner channel that's built into TradeStation uses 20 as well. We have a 1.5 on the number of ATRs, and let's do and click OK. There we go. So we can see that whenever there is a penetration on the upper band, we get a long entry. Whenever there's a penetration on the bottom band, we get a short entry. So the strategy is just following the rules of the Keltner channel. Now, let me go ahead and go to the very front of this chart because I wanted to show you a few things. All right, this is what's happening on the chart on the current data. Perfect. Let me go here to data and go to the strategy performance report. This is my performance summary. Let me pull this up a little bit. You can see how the strategy or the net profit here is $27,000. Over a 10-year period is not that much, but the profit factor is about 2.38, meaning that for every dollar that we lose, we make about $2.38. In the historical backtest, we have 188 trades. Almost 90% of those trades are profitable. So we have 169 winning trades and 19 losing trades. The average trade net profit is of $144. The average winning trade is 277. So you get a lot of performance metrics that help you get an idea of how the strategy is working. And better yet, is this a strategy that is going to work going forward? Now, there's an initial optimization that you can do on any strategy. Because as I said before, the parameters that we selected for the strategy were just default, like the 20 bars that the average is using or the 1.5 ATRs that are being used in the calculation. There are many things that you can optimize based on the symbol that you're looking at and the historical period that you're looking at, because not every symbol moves the same. Not every symbol is going to show you this same performance. In fact, if I go from Spider and I switch it to Microsoft, a technology stock, let's go ahead and take a look, MSFT, and hit enter, you can see that for Microsoft, the strategy does not provide any profits. The profit factor is 83 cents, meaning that for every dollar you lose, you only make 83 cents back. Not a good strategy. But you can see that a small switch on the symbol just makes the strategy not attractive at all. So it's a strategy that works well on SPY, and it may work well on other securities, but based on the symbol that you're trading, you may want to do some optimizations to see if you can bring those numbers, if you can improve those numbers. Now, optimization, of course, needs to be done carefully, because optimization, if you go behind the curtains, what it's doing is just curve fitting the strategy to data that has already happened. And as a trader, you have to be very careful in doing that, because the least you want is a strategy that is so curve fitted to data that already happened that it breaks down as soon as you turn it on real time or on data that it hasn't seen. That's the whole message of this class today. How do we use optimization in a way that gives us a little bit more of an understanding on the strategy behavior? Okay, so let's go ahead and take a look at this performance report, Microsoft, because that's the one that is not working, and see if there's any way that we can optimize this to make it better, to give us better results. Better yet, once we go on to the walk forward optimizer, how we can use that tool to see if we can make it work better. So let me go over here to the settings. Let me close out this performance report so it's not in the way. I'm going to go into the settings of the strategy. I'm going to click on customize. This will give me access to all the inputs that we talked about earlier. And sometimes, yeah, it is overwhelming, but there's a few things here that I'm going to do. For example, I'm going to take a look at the length just to see if I can improve that. Let me optimize that, because 20 is the default parameter for the Keltner channel. But what if a smaller number or a bigger number makes more sense? I'm going to optimize from 10 all the way to 55, meaning that it'll test 10, 15, 20, 25, all the way until it reaches 50 and find the optimal parameter for this. Okay, so I see the range right here. I'm going to do the same thing for the length here. So optimize 10 to 50 in increments of 5. There we go. Now, I may also want to improve or switch the ATRs and optimize the ATRs. I'm going to optimize the number of ATRs. I'm not going to do a lot of steps here. I may just want to test 1 to 2 in increments of 0.5, meaning that it'll test 1, then 1.5, and then 2. I don't want to extend that much, because then you're going to have a band that is all the way up here and another band all the way down here that may be very difficult to cross, and the entries will be very sporadic. So let's keep it tight, the number of ATRs, because this number determines how far away the bands are going to be. And we don't want to exceed that. So let's go with that. Let's do 1 to 2 in increments of 0.5. And I'm going to do the same thing here for the short side. I'm going to click on optimize 1 to 2 in increments of 0.5. Okay. Yes, I started off with SPY. Yeah, that was my first intention. But then I said the strategy is already doing very well on Spider. And that's why I switched over to Microsoft, because Microsoft is doing really bad. So we want to see if optimization can help us turn the strategy around for Microsoft. And then we were saying, yes, every strategy may have a different performance on the security because every security moves differently. And depending on which security you want to trade, yeah, you want to be able to use a strategy that you can mold and make it work for what is it that you're trading. Let's see. For the length of the ATRs, I'm going to leave them the way they are. Yeah, let's leave the floor amount. Maybe the floor amount is something that I can change. For example, the position basis. Let me turn the position basis to true. When I turn the position basis to true, all the floor amount calculation needs to be done as a position and as a whole. So what I can do here on my floor amount, I want to optimize from $50 all the way to $500 in increments of 50. This is how much money is required before the trailing stops kick in. That's the concept right there. I'm going to click OK to that. All right. And I'm going to do it also for the long. I may be selecting way too many inputs. I'm not sure if you've ever done optimizations in TradeStation before, but the more inputs you select to optimize, the more the tests grow exponentially because all these numbers are multiplied by each other. Remember that optimization is in its right to run every possible parameter combination that it can. And the more inputs you optimize, the more tests this is going to grow. But let's go ahead and try it. I said 50 to 500 in increments of 50. There we go. So we have 1, 2, 3, 4, 5, 6 different inputs that we're optimizing simultaneously. I'm going to click on OK here, and that's going to give us a total test count. Everybody sees that? It actually found every single combination, and there's a total of 72,900 possible combinations in all the parameters that I selected, because it has to test the range from the very beginning to the very end in the increment that I specified. Of course, I can sit here and do an exhaustive, that's the method that's selected, an exhaustive optimization, but I'm just going to go here the easy way and just go genetic. Genetic is interesting because notice that the number of tests is reduced to approximately 10,000. So we don't have to go through every single iteration. And what happens is that it uses, let me go here to advanced settings so you can see what it uses. Here are the genetic optimization settings. It uses generations and population size and tries to create samples out of our data and narrow down where the sweet spot is. This is pretty much genetic calculations that goes through different mutations where those groupings of different samples, this regards the ones that are not providing good results, only keeps the ones that are the fittest, and then just keeps on mutating that group until it finds an optimal area. Very interesting. Genetic optimization is not something that TradeStation created. We just brought in the methodology so that it would help you in optimizing strategies and not have to sit there hours waiting for the optimization to run. Although many traders use optimization and let the computer run hours or even days to complete an exhaustive optimization. We don't have to do that. We can use genetic. A lot of people don't really rely on genetic because it skips a lot of the parameters, but it's something we can all test. For demonstration, we're just going to use genetic optimization. But for this, we're also going to exclude data. Now, if you don't exclude data, it's going to run the optimization on all the data you have. We have 10 years worth of data. I like to reserve an out of sample because that's the main concept of this class, where you reserve a chunk of data so that you really put those parameters to test. Because one thing is for the strategy to select optimal parameters on data that it's actually seen and see where the best entries and exits are. And as a trader, you can probably do the same thing. You can sit in front of a chart analysis and say, if I had entered here and exited all the way up here, that would have been a perfect trade. Anybody can do that. When you run an optimization, that's exactly what's happening. The strategy is looking at historical data and finding where the optimal entries and exit would have been. For data, it's just looking at the data. So reserving an out of sample data, it's hiding that chunk of data from the strategy so that the strategy does not use it in the optimization. And then what you can do is compare the in sample with the out of sample, because what you want is consistency. You want consistency between the in sample and the out of sample. The in sample is the data the strategy sees, and a lot of times those results are going to be good. But what matters the most is how does the strategy hold when it's applied to data that it hasn't seen? Because that's exactly what would happen in real time if you were to trade a strategy. You just have the strategy, you put it on a chart, you turn it on, and then you want it to perform well. Well, on data that it hasn't seen. That's exactly what we're looking for. So I'm going to do here and exclude the last 30%. I want to take a look at what happens. I'm just going to click OK here. And let's go ahead and click on Optimize. Here we go. We can see how the strategy is doing its optimizations. We can see that is running through the sequences. It doesn't have to run exhaustive. This is just doing, there we go. And it just finished. Now, it did that very quickly. Those 10,000 tests, I could have just probably sat here and let it run the 72,000 that is suggested for the exhaustive. But you can see how quickly the genetic optimization is able to turn the strategy and run it, all the different parameters, and see what results we get. Let me go ahead and turn off account orders and positions, because let me right click on one of these. Okay, there we go. Now I'm looking at only the strategies. Account orders and positions, by the way, if you're new to TradeStation, is a way that TradeStation shows you historical trades on the chart. And what I did here is I turned those off so that I could just focus on the ones that are generated by the strategy. But now if I go here to my strategy performance report, you can see how the strategy turned around. Now it's not showing a negative, it's showing a net profit. Now the profit factor is not as high as we had it for Spider, but we have a 1.33, which means that for every dollar we lost, we made $1.33. We are on the positive side. Of course, there's a few things on this strategy that we haven't set. And this is not counting for slippage or any transactional costs. This is just plain, it's just a strategy looking at entries and exits, assuming that every entry and exit is going to be perfect, and then generating a report out of that. A lot of times as a trader, we know that no entry and exit is always perfect, and sometimes there's going to be slippage, but this strategy is not accounting for any of those transactional costs. So when you see a profit factor of 1.33 or something that is so close to breaking even, I wouldn't call this a good strategy. We have our gross profit was $41,000, but it lost $31,000 of that. We have a net profit, but when we look at the strategy behavior, I would have liked to have kept more of that profit, and it didn't. So something's not right with this strategy. But in the optimization process, we were able to revert this to something that is positive. One thing that I wanted to tell you is these filters up here, because this is the values using all the data. All data, meaning all the 10 years that we have on the chart. But take a look at this. I'm going to go here to the drop down, and now I have in sample and out of sample that I'm able to select. If I go to the in sample, it's the first 70% that the strategy tested on. If I go to in sample, take a look. The results are better because, and it's expected for them to be better because that's data that the strategy is looking at, is analyzing and determining where the best entries and exits are. So I was expecting this to be higher for the in sample. For the out of sample, this is the data that we told the strategy, don't look at it, reserve it, and then apply them at a later time. The out of sample, we can see that we are on the negative side on the out of sample. So what we see in the in sample did not carry over to the out of sample. Not very confident about what the strategy will do going forward. But if you take those two performances and you combine them in all data, this is what you get, a 1.33. Now, if I had done the same thing on Spider, let's see what happens in Spider. Let me go ahead and close out of this. Let me go ahead and double click on the strategy, customize. So you can take a look at, for the long length, it kept it at 20, but for the short, it bumped it up to 40. Look at the number of ATRs for the long is 1, and for the short is 1.5. What else did we change? The floor amount. It was using $100, now it's using $350 for the long and $50 for the short. So the few things that the strategy changed based on the movements of Microsoft. Let me go ahead and revert those back to 20. Actually, let me just keep them the same. Let me go back to what we were looking at, which was, I'm going to keep the parameters that we found from Microsoft. And I'm just going to switch here the symbol to SPY. Let's go to data and go to the strategy performance report. So the profit factors use 1.45, a little bit better than, and this doesn't have out of sample, does it? It does have out of sample. Okay. Let me run a quick optimization just to make sure that it's looking at Spider. I'm going to go and double click on the strategy. One of the nice things about optimization in TradeStation is that it remembers the settings that I was using. So if I click on optimize, it remembers the same values that I used before. And I can just very quickly just select the input, click on optimize. My computer is running a little bit slower than what my mouse is doing. So let's give it a chance to respond. I don't want it to crash. And I did, I believe, this last one and this one, the floor amount. Okay. We're still going to be using genetic optimization. I'm going to go here to advanced settings, make sure that I'm reserving 30% of the data, the last 30% of the data for out of sample. I'm going to click OK and then click on optimize. Okay, so that's going to optimize my parameters one more time. It's going to look at the WFO test, the inputs that I selected for the optimization. We can see the generations that are happening right here, almost finishing. And there we go. Now, if I go to data and go to the strategy performance report, this is the out of sample data. If I go to all data, 1.57, this is odd because we were seeing better numbers before we even optimized. In sample, yeah, this is like the one we were seeing before, right? That's the in sample. That's when we did the optimization. Now, out of sample, it breaks down. You see how it goes into the negative side. So that's the whole idea of optimizing using the walk forward concept. The walk forward here, it's a single walk forward analysis. And I call it single because we're looking at one piece of data, 10 years of data. We are using 70% as the in sample and 30% as the out of sample. When you use the walk forward optimizer, it takes that same concept and runs it on steroids, meaning that it's going to be completely the same concept, but completely overlaid on different layers so that you can take a look at different pieces of historical segments. Let me show you exactly what I mean by that. I'm going to search for an image here because I want you guys to, I know that I was looking at an image here and I just want to make sure that, all right, this is an image from the help of TradeStation. And sorry for the fuzziness of this image, but this is what I wanted to take a look at. Let's imagine that what we have up here are the months of data that we have accumulated on the chart. When we did the single walk forward analysis, we had 70% of this data, I would say month one to month 8. That was the in sample. And then the remaining 4 months were the out of sample data. So what it does is it runs the optimization parameters, the optimization in the in sample. It finds optimal parameters, and then it applies those parameters to the out of sample segment. This is what matters the most because this is what's mimicking turning on the strategy in real time on data that it hasn't seen. But now what we do is that we break that into different runs, meaning that we don't do 70% of the data on the whole segment. We break up the data into multiple runs and multiple segments. So let's say like the first run is going to run on the very first 5 months of the historical backtest or 5 years. I know that I'm talking about here in months, but let's imagine that these are years. So the very first 4 years is going to run the optimization and find optimal parameters. And then it's going to take those parameters and apply them to year number 5. This is the out of sample. Then it's going to shift the historical segment forward, hence the name walk forward. It's going to shift it 1 year, but the percentages remain the same, the 70 and the 30. But now the in sample is going to be years 2 through 5. Notice that it includes the year that was the out of sample before. It includes that year. And then it sets year 6 as the out of sample. It finds optimal parameters for that segment, applies them to year number 6, and it saves the result of this out of sample. What that allows you to do is pretty much find results that mimic running the strategy on data that it hasn't seen. What this does, it saves every out of sample performance and puts it all together into one report. It actually skips all the in sample because the in sample, you're going to assume that is curve fitted performance report. What you're interested in is what happens on all of these out of sample segments. Now you do get a more, I would say, accurate kind of performance measure because you're not only relying on the very first few years of the historical backtest. This is pretty much setting little segments apart from the very beginning of the historical period and adding them all together towards the end. Okay, so hopefully this makes sense. And this graphic allows you to understand what the walk forward analysis does, because that's just the basis of this. And we need to be able to understand this if you're going to be starting to use the walk forward optimizer. Now, how do we set up the walk forward optimizer inside of TradeStation? We do a regular optimization. So I'm going to double click over here and we're going to go to customize one more time. Maybe we'll only have time to get the walk forward optimizer started, and then we'll probably do another class to go into the settings of the walk forward optimizer and how to take advantage of it. But here, I'm going to optimize the same parameters that I had optimized before. And those are the optimization gets started, very similar to the simple optimization that TradeStation supports. I'm just going to let my computer respond a little bit slower here. I'm not sure if you guys can tell, but the more I use the optimization process, it's just hanging up on me a little bit. Okay, and I did this one, which is the floor amount. Okay, and this is the last one. So now we have our parameters in place. I'm going to click on, oh, come on. There we go. And notice that over here we have optimization type. We just go here in this drop down, and instead of doing the standard, we do the walk forward. And in the walk forward type optimization, we have to give this test a name. I'm going to call this WFO, which is walk forward optimizer test. And let me give it a date also. This is today's July 1st. That way I know that I ran it today. I'm going to do genetics, so it runs a little bit faster. And don't have to save the result. Once you do this, it should automatically save a file for you. You don't have to do the save results to file. Well, so let's go ahead and test. I'm just going to optimize because in this process, the optimization process is saving all the data pieces that are necessary for the walk forward optimizer to run. This is just going to save the file that's going to be used for that. Okay, so it finishes. This is what we just did just a moment ago. We just changed the type to walk forward. And what we need to do now is go here to the apps menu because the walk forward optimizer is its own standalone application. We go here to the apps inside of TradeStation, and you should find something called the walk forward optimizer, and we need to open that up. All right, so for this class, I'm going to, first of all, try to open the file. So file, open, I'm going to go here to open walk forward test. I'm going to go here to this drop down and look for the one that I just saved. Here's the one. Here's the one that I generated, right? SPY daily. That's the chart that I have that I'm on. And I named it WFO test July 1st. Good thing that I added the date because I had other WFO tests in here. So this is the one for today. And I just click on open. That loads the data into the walk forward optimizer. Now in the walk forward analysis, I'm going to do a cluster analysis. But before I do that, before I do the cluster analysis, I'll explain the single walk forward analysis is what we did on TradeStation, where it just does one chunk of in sample and then one chunk of out of sample. The cluster analysis is the image that we looked at, where it takes the totality of the data and then it breaks it into smaller chunks of data where it runs those single WFAs on each one. But before I go there, I'm going to go here to setup because I want to show you what is it that the walk forward optimizer does to make sure that it gives you somewhat realistic and results that you can be confident on. And you can tweak the settings if you want to. I'm going to go here to the test criteria settings, because in order for a test criteria or a test to fail or pass, it has to run through these different criterion. For it to pass, it has to pass all of them. What is the criteria? It says here fail if total profit is less than 0. So if it's less than 0, of course, it's going to fail. Fail if walk forward efficiency is less than 50%. This is interesting. This is an interesting setting because what it does here, it compares how the strategy behaved in sample to how it behaved in out of sample. And if there is a drop in efficiency greater than 50%, then it will fail it. So it's got to be, if the walk forward efficiency is less than 50%, meaning that it doesn't do half as good as the in sample, then it's going to fail. Consistency of profit, fail if less than 50% of walk forward runs were profitable. Distribution of profit, fail if any single run contributed more than 50% of the total net profit. And fail if maximum drawdown in any single run exceeded 40% of initial capital on a strategy is set to $100,000. You can modify that if you need to. But in order for it to pass, it needs to pass all 5 criterion. Then we're going to click OK to this, go back to my menu, and start the cluster analysis. And this is running in the background. It'll probably take a long time to complete because it runs a cluster of different percentages and different runs. Let me go ahead and wait until the first one pops up so that we can explain what the settings are here. Here we go. So out of sample percentage, this is OOS, out of sample percentage, it does a 10% first. So it runs the in sample at 90% and the out of sample in 10%. And the runs, it says here 5. The 5 means that all the 10 years of data that we have on Spider are broken down into 5 segments, and it runs those 5 segments separately to see the performance of each. Does that make sense? Now we are on a different one that says, okay, we're still keeping the 10% out of sample, but we're breaking the data into 10 individual segments and then running those performance reports on each one. And notice that it failed. Interesting that the first one passed, and I think we can click on the very first one, not until it finishes. But you can see that it's going to stress test the data in different pieces of, or it's going to organize the data in different segments. Beginning date, end date are all going to be different. Right here, we're running 15 individual segments of the 10 years of data, maintaining the 10%. But this, as soon as it goes here and ends at the very end of this row, it's going to start right here and use a different percentage using the same segments up here. And what we're looking for is to have an average pass in the whole cluster analysis. Now we have 2 out of 2, 2 out of 4 have passed. So yes, it's a matter of letting it finish. It's very intensely running through all the different iterations and finding if something failed or not. You can see at the bottom, it says busy with walk forward analysis. And you see the percentage of the current run, and we have an estimated time to completion. Now we have, let's see, this is almost complete. That failed. What I'm going to do is I'm going to let it run. And then if we have some time next class, then we'll look at this again and say, what is the result? But let me see if I find, I cannot do anything on the walk forward optimizer until this finishes, which is a bummer because I could have loaded other results and taken a look at other complete clusters so you can see what they look like. And notice the tests per WFA are 2087. That's interesting because it has to run that, for this particular one, it has to run that 25 times. Every one of those 25 runs has 2087 different variations. So as it goes into more runs, it's going to take a little bit longer to complete. All right, guys, that's my class for today. I think I gave you a primer on optimization on TradeStation. what it looks like and how to get the walk forward optimizer started. I'm going to let this run, although it seems like it's frozen. Notice at the bottom it got stuck at 41.7% and it's not progressing. Hopefully it's just a matter of letting it be and letting it run. But I'm going to try to let it run and see what type of results we get, and then we'll take a look at it again in our next class. Okay, guys, thank you so much for joining me today. This is the strategy trading class. Make sure that you look at the schedule and see what the other topics are. I'll be glad to see you connecting with me again next Tuesday at 11 a.m. Eastern. Have a wonderful day. Thank you for joining me today. Goodbye, everyone.